Good morning, everyone, and a very warm welcome to our event on generative AI, which is a technology we're extremely excited about and very much convinced will reshape our industry in the coming years and meaningfully improve our ability to help millions more achieve their goals and improve their financial well-being. It's actually really hard to believe that we're on the eve of the 1-year anniversary of ChatGPT being launched. And during that period, we at Multiply have kind of been on a journey ourselves. It started off with us kind of tinkering around and playing around with the tools that are out there, all the way through to where we are today, which is implementing specific, impactful features that will ultimately improve customer outcomes. And our goal today is essentially to take you all on the same journey. So if there's one thing we want you to take away from today, it is progressing your thinking towards that specificity, those specific features and applications in which generative AI could help your customers. So to kick off with, Mike, my co-founder, is going to give you a bit of a sense of the future and what we can do. And what's really cool is that a number of things that he's going to take you through are going to be features that will be available in the coming months. So if you're interested in any of those, come and speak to us at the end. And then following that, we'll have a panel discussion where I'll actually be moderating now, but we'll be looking to share diverse perspectives from different parts of the industry, and we've got some absolutely fantastic panelists. And hopefully there'll be some time for some Q&A towards the end and a little bit of networking too. And with that, please give a very warm welcome for Mike, my co-founder.
Morning, everybody. Can machines think? So 100 years ago, Alan Turing began his famous paper with this very question before rightly deciding that it's actually not a very useful question to ask. Instead, he thought we should focus on what machines can actually do. Turing's vision of artificial intelligence was very different from the computers of the time. He envisaged a computer that you could ask questions of and ultimately be unable to distinguish between its answers and those of a human. This talk is a history of how we got from the world of 1950 to the world of today, 2050. We take for granted that computers can speak to us in our own words. This is the future you live in today. So when did this happen? How did we get to the world of 2050? When did computers learn how to talk? After Turing, the second half of the 20th century saw a technological revolution. Now, all of you looking around are far too young to remember the late 20th century, but I suspect it probably looked something like this. This was a time of growth and rapid change that merits its own talk. Finance in particular presented many problems that computers were great at because it focused on clearly defined models and numerical systems. But in all this, nothing that matched Turing's vision emerged. Even as the technological revolution continued up to the new millennium and beyond, computers were still falling short of that vision, despite many victories for artificial intelligence. In 1997, Deep Blue beat Garry Kasparov at chess. And over a decade later, the DeepMind AI AlphaGo took on Lee Sedol in the game of Go and won. These successes and the technology that enabled them were revolutionary. But the changes in finance they heralded were more incremental. By the 2000s, increasingly sophisticated investment strategies could play out in microseconds between high-frequency traders. Manual, predictable processes could be automated. But for everyday people, finance changed surprisingly little. People who had filled out forms in branches now filled them out online instead. Calls with advisors were done over video messaging rather than in offices. But the experience fundamentally hadn't changed. And the problem is that the real world is not like chess or Go. It's poorly modeled as a game or even as a well-behaved financial system. It's generally much more complicated. Real world is nuanced, it's difficult to break down into a simple set of rules. Something always comes along to further complicate the picture. Of course, we have a technology that grapples with the difficulty of representing a messy world. We have a technology that can represent nuance and variety. And it's one of our oldest technologies of all. It is, of course, language. Now, computers in 2019 couldn't deal with language. They followed rules without really understanding how they could be subtly broken. They fit any questions you asked into predefined templates. And they struggled as soon as you went off script. This was the gap between the technology available at the end of the 2010s and that which Alan Turing had envisaged all those years ago. And then everything changed. In 2019, there was a breakthrough. We worked out an architecture for machine learning that was ideal for language. Now, these so-called transformers gave us the potential to understand human language. And that potential began to be realized with the release of publicly available large language models, or LLMs, like those that powered ChatGPT a few years later. Now, in finance, I would say there were two common reactions. The first reaction was to worry how the AI was going to take all our jobs. This was mostly done by people who, to be fair, didn't have a great grasp of the technology and so ascribed it godlike powers of automation. And it was also done by those people who did understand the technology, but who were invested in it, and so also ascribed it godlike powers of automation. The second reaction in finance was from people who didn't really see the impact of the technology. Finance is a world of numbers. Previous generations of AI had slotted very neatly into that world, and their application was obvious. So what if those technologies couldn't talk in human language? It wasn't clear how language abilities would benefit the field of finance. Here's what those groups missed. This revolution wasn't so much about intelligence as it was about language. And because it was about language, that meant it was going to have a huge impact on the world of finance. It's just that that impact was going to be in a very different place to the previous technologies. It was basically going to be at the boundary where numbers met people. This was the moment computers learned to talk. So if the early 2020s was the moment this happened, what did that change actually do? How did that change play out over the next 30 years and lead to the world we live in today? The first impact that this new technology had was on how we shared information. Because once computers can talk, then everything is portable. Picture the scene almost 30 years ago, early 2023. The government has tried to force banks to share information more broadly, but those same banks still jealously hoard your data. They are gatekeepers, and sharing your information is awkward and frustrating. You couldn't just take your information with you because documents weren't portable. They had to be in the right format. They had to match the expectations of whatever system you were trying to use at the time. and the burden of transferring information fell on people. It's probably hard for me to explain to some of you younger people just how unfun it was to have to enter the same basic facts about your life again and again and again. To insurance companies to get quotes, to banks to set up accounts, to advisors to get advice. It sucked. Everyone knew that it sucked, but it was the best that we could do. Generative AI changed how we shared information, and this happened in 2023. Now, I'm lucky enough today to have some examples from that time to share with you. These are examples from the company I founded, Multiply, and they're representative of what LLMs were able to bring to finance. LLMs made it much easier to upload information quickly from standardized documents. Take a driving license, for example. As a bank, you needed to collect this sort of information anyway, so that you could check your customers who they said they were. But you could use this as the first step of onboarding to collect all the basic information that you needed from your customer. Of course, that wasn't where the technology stopped. It also allowed for data to be extracted from much more complicated documents. Here's an example that, as I near retirement, I'm especially familiar with, a pension statement. These are lightly structured, although they all tend to be slightly different. Generative AI meant that didn't matter. By 2023, it was possible for you to upload a whole pension statement, regardless of format, and your financial advisor could quickly ingest that information. In seconds, it would be ready to be fed into their projection systems to quickly identify any gaps in your retirement needs. But the power of generative AI went further than this, even in 2023, because it opened the possibility of passing documents with very little structure at all. So rather than sit and enter data by hand when you were meeting your advisor for the first time, or you were signing up for a bank, or you were going through those same insurance quote processes, you could just upload your documents instead. And from these documents, you could quickly tell how much insurance cover a person had from their policy documentation. You could tell what their existing financial assets were from their accounting details. You could tell what they had been recommended previously from their existing suitability reports. This was all possible in 2023. Of course, you know this. We now live in a time where your data is extremely portable because the format is just text. Ordinary human text that you and I can type, that we can understand, and that we can move about very easily. I don't need it to be in a PDF format. I don't need it to be an Excel format. It can be an image. It can be a text file. It can be a spreadsheet. If I want to sign up to a new service, I can just take a picture and share my information. Generative AI solved how to interface between natural language and the structured formats that our underlying banking systems understand. And this means that information is ultra portable because the medium is just text. But if AI has changed how we share information with the world, it's also changed how that world shares information with us. Because once computers could talk, everything became personalized. 30 years ago, in 2020, things were in a bit of a mess. News about the world, educational articles from your bank about fraud, market updates from your financial advisor, all of this was rebranded as content. And content was every bit as fresh and exciting and dynamic as that word implies. Finance was a great example of how this content was siloed between different industries. You could read articles on the BBC about interest rates or the budget, but have no sense of how it applied to your own circumstances. Once upon a time, you might have had a financial advisor who'd have been able to brief you on the latest news if you had questions. Now you'd have to make do with the odd belated market update email, even supposing you could afford to pay for a financial advisor at all. Generative AI made content selection democratic. Programs had already existed that could travel the internet, blindly harvesting content. These allowed for personalized feeds of information, which was the main pulling power of the social media platforms of the time. But generative AI disrupted this balance, because now AI software could go out and scour the web on my behalf. And I didn't need programming expertise or control of the Facebook algorithm to guide its searching. It could sample the world of blogs, newspapers, podcasts, and the like, and find content that was actually interesting and relevant for me. So let's see what was possible again with 2023 technology. Now, previously at Multiply, when we'd offered our advice direct to customers, we produced a daily email that summarized the key stories of the day in plain English and detailed their relevance for people making financial plans. Now, this captured people's imaginations, and it was hands down one of the best things we ever did in terms of engagement, in terms of making people care about things, in terms of helping people understand the world and how their finances related to it. But between scouring the web for interesting content, assessing its relevance, and actually writing the email, this is something that took a well-practiced individual at least an hour each morning to do. And with generative AI, we were able to automate the whole flow without any human involvement, and we were able to make it better. So as well as my interests and my hopes for the future, our agent was driven by its understanding of my personal and financial information, and it was able to scour the web on my behalf. It could review each story and assess its relevance to me. It was then able to take the stories it thought I was interested in and make them applicable to me. It was able to rewrite them in terms that made sense to me. It was even able to explain how stories affected me and my finances. Of course, what works for me wouldn't have worked for you, or my parents, or my kids. My mum would have probably preferred a more verbose style. We were able to accommodate this. And on the other hand, my kids preferred a much more casual, conversational style. And with generative AI, this was no problem. So if that was possible in 2023, what happened between then and now? Generative AI wasn't magic. It couldn't walk around and experience the world. It couldn't match the emotional intelligence of a human being. It fundamentally lacked insight into the human condition. And not everyone understood this at first. Not everyone used generative AI for the good of humanity. The late 2020s saw many once trusted organizations flushing their reputations down the drain by churning out AI-generated content. Today we've learnt the lessons of that period. We still have human journalists. We still have human financial advisors. We still have people producing interesting things, whether it's short-form video, virtual reality films, podcasts, long-form articles. But the facts and the ideas that those journalists write about, the news that they uncover, and the things that they discover are brought to me by AI. And I can read it, listen to it, watch it, transform it in ways that make sense to me. So while generative AI has made good content hard to find in a sea of junk, It's really good at sifting through that junk to find the hidden gems. And because I can talk to it using my own language, power has moved away from content gatekeepers like the big social media networks. The result is we live in a world where everything is personalized because text can easily be understood and transformed by computers based on what we want. So we've talked about how the coming of age of generative AI in the early 2020s meant that data could easily flow into our computer systems. And we've seen how personalization meant data coming out of those systems could be adapted just for us. Combining these two things together gives us an obvious final step. If computers can talk, then everything becomes conversational. Now, looking back, I think this seems entirely unsurprising that conversational interfaces were the big success story of 2020s. There was a reason that it was ChatGPT that caught the public imagination first. But it's important to understand why conversational interfaces were so successful, especially in finance, and what made them different from the chatbots of years before. To understand this, you have to understand the challenges faced by people at the time in 2023. The old world, the one where we started our story back in the 20th century, was dead. In this world, humans had given out advice inexpensively. You could have walked into your local bank, been recognized by your local bank manager, who might have personally helped you to get a mortgage. Now that world, if it ever existed, was very definitely gone now. Advice was expensive, banking was impersonal, and you couldn't get hold of people when you needed them. Now, the changes that killed the old world actually made things harder for everyday people. Pensions were no longer a benefit that you were entitled to, they were an investment that you had to manage. Work was becoming more short-term rather than a steadily growing income across your career. Budgeting was a nightmare. You've got to remember that this was before nuclear fusion, the technologies of today. So energy in particular was expensive and volatile. All this meant it was enough for most people to get by. Good finances were not the default, even from people who were doing well professionally. Now, generative AI was able to help these people because it meant that some of those lost benefits of the human world could be returned to finance. Let's look at what that meant in practice. Now, at Multiply, we were in the business of delivering good financial advice. And good financial advice is about helping people achieve their goals. The first problem that some people had, though, was that they didn't actually know what their goals, what they wanted to do. Conversations were a great way to explore this because they allowed the user to explore things in an open-ended fashion. This is what human advisors knew. They were great at it. Our conversational advisor at the time could make suggestions and it could adapt to what you wanted. The reality is that people are not always aware of the options they have or what is sensible. When presented with a form to fill in their future plans, they freeze. They don't know where they want to live. They don't know what they want to do. These are things that digital interfaces at the time did not deal well with. Humans, of course, dealt really well with these things. If you had questions, you could get those answered when you had them. The conversation could adapt to your level of understanding, to the things that you were interested in, to your personal desires, the things that you had dreamed about, the future that you wanted to build. And because generative AI systems like the one deployed by Multiply, were able to interpret your answers and feed that information through to the same systems and controls that were already in place to generate advice, we had a safety net. This is really important. We did not rely on generative AI's impressive, but ultimately compromised reasoning skills to generate the underlying advice. We used the same systems that had been built for control, that we understood, that we could configure in the ways that represented solid underlying principles. But once that advice had been generated, generative AI could interpret the things your advisor thought you should do in a language that made sense to you. It could adapt that advice for the questions that you had. This is what made it different from something like ChatGPT. Now, up to this point, digital experiences had robbed people of the feeling of being heard. Generative AI helped people feel understood because it listened to things and it reacted to them. Now, prior to this, advice had become heavily caveated, increasingly standardized, thick with risk warnings, and long, unreadable terms and conditions. This had left people feeling understandably confused. They were less and less equipped to understand things like insurance, retirement, or the basic financial products that would help them achieve their goals. Generative AI helped people understand these things because there was no longer a need for one-size-fits-all explanations. And these changes in AI meant not only that people felt enriched by digital experiences, it also meant that humans were free to provide value where they were most valuable. Everything is conversational because that's the best way to understand and meet each individual's emotional needs. It's always nice to take a moment and see how far we've come. You live in a future that was revolutionized by the changes in technology that happened in the early 2020s. That technology successfully delivered on the vision of Alan Turing. It passed the Turing test. But predicting the future is difficult. And in many ways, the future we live in isn't the one that people expected. In the 1950s, when we began this story, visions of the future were often framed by the way people at that moment saw the world. Many people found it difficult to see outside of the things they were used to, things that were so obvious that they took them for granted. And at the same time, when faced with rapid change, people had often made the opposite mistake, to assume that technological progress will continue to move at an ever-accelerating pace, that problems will be solved, that development can be extrapolated into the future as a curve that always goes up. With hindsight, this is obvious to see. And we now live in a world that represents a mix of these things. 3-day weekends are the norm now, but we still have to go to work. People have more choice than ever on how to access their money, but they still need large financial organizations to look after that money or insure them against unexpected events. AI is capable of doing many things, but human contact is still highly valued because humans were never just things that computers could easily replace. In 2019, we found a way to talk to computers in our own language. This changed for good the way we interacted with technology and the way it interacts with us. Because of this, I haven't had to think about filling out a form in the last 20 years. I've got used to listening to a personalized news summary every morning while I take the hover bus to work. The chatbots of the past are a distant memory. Today, I can have a conversation with a computer that meets my emotional needs. As we've seen, computers learning to talk was a big deal, but it was also just the beginning, because it turns out we had quite a lot to talk about. Thanks for listening. Yeah.
Thanks a lot, Mike.
Just to highlight this fact. Obviously, I think the problem with one of these talks is that they always embrace a certain kind of artifice when talking about the future, and I thought it made sense just to be explicit about that. The reality is there's lots of things that we don't understand, but I hope I've at least partially convinced you of some of my arguments about how I think things will evolve, what I think are more inevitable consequences, although there's obviously lots that we can't predict. All of the things from 2023 are real. I didn't type any of them in manually. They all came directly out of our systems. And if you want to see any of those features, find us at the end or drop me an email. Thank you.
Okay, so now we're on to our panel. We're going to kick off with just some quick intros. Do you want to kick us off?
Yeah. Hi, my name is Brian Burns. I'm the head of personal finance at a digital saving and investing app called Moneybox. I started my career in kind of high net worth private banking at Coutts, advising high net worth customers. And then for the last kind of 10 years or so, I've been more in the mass market kind of retail space. At Moneybox, I'm kind of looking at two things relevant for today's talk. One is dealing with the FCA on something called the Advice Guidance Boundary Review, which is actually a lot more interesting than it sounds. And then also more recently kind of leading our work and exploration into AI, large language models, and how we might be able to surface those to our customers.
Hi, Sam Seaton. I'm the CEO of Money Hub, and I started my career like a long time ago, but it was in computer science, but I didn't start in financial services. So that's an advantage, I think, because I can still remember what it was like to not have a clue about anything to do with money, and I've never forgotten it. So, and the thing that I'm so excited about, honestly, about about AI and all that's happening actually with technology is at Money Hub, we aggregate an enormous amount of data for people. And we do that so that our enterprises can try and service the customer faster, quicker, and reach a much bigger audience and do that well. And so for me, I think it was, Winston Churchill that said, if I had more time, I'd have written less. And it's the same with data, isn't it? You've just got so much data, all of us, in all our businesses, but it's so difficult, to elevate it, to know what to do with it. And that's what I find so exciting.
Cheers, Sam.
Thank you. So I'm Mark Pearson. I have spent all of my career in financial services. However, I have the advantage, a very privileged position of growing up in the 70s with a father who was a designer of computers. So Queen's Silver Jubilee 1977, I wasn't out at the street party. I was actually typing a game program onto a Commodore PET 64. Some people fortunately have nodded at me and recognised what that is. Loading it onto a cassette. Cassettes you probably don't remember either. And then playing it. Financial services is my world. It has been for 40 years, right up to everything from being an advisor through to running businesses, changing businesses, acquiring businesses, and working with various pension ministers and the regulator on the creation of codes of conduct and behaviours of advisors. So that's my bag.
Thank you very much, Mark. This should work. This is recorded. Thank you.
Sorry. Hi, everybody. Yes, I'm Mike. I co-founded Multiply, which is a financial advice company 7 years ago with Vivek. Prior to that, I was working in academia. Today, I'm still CTO of Multiply. We founded Multiply at, I think, on the curve of the previous AI wave. I mentioned DeepMind and AlphaGo in my talk. And that was when we started in the game. And I think ultimately we're frustrated at the time by the challenges of getting that technology into the hands of everyday consumers. The thing that motivates me is making a difference to people's lives. And the reason we're so excited about generative AI is a lot of those speculative demos and visions of the future that we talked about back at the time are now actually running on people's laptops, which is an amazing transformation to have been part of. And as I talked about, I think there's a long, long, long way to go. So really excited about that.
Thanks, Mike. Hi, I'm Craig from Google Cloud. Thank you for turning up in such encouraging numbers is appreciated, and thank you to Multiply AI for having me on this panel. It's a privilege all around, really. It's a privilege to work in an industry that's truly entered the public consciousness. My parents, who have had no idea what I do for a job for 20 years, are now asking me about the impact of Gen AI. So it's a very surreal but a very exciting time. Thank you.
Cheers, Craig. So I think where we're going to begin is going into some of those kind of granular use cases. So there's obviously a huge amount of interest and excitement in generative AI, but I think there's also quite a lot of confusion. I think a lot of companies here today will be hesitant about how to give it a go, how to get going with generative AI features. So one of the things on our mind are what's stopping everyone from jumping in, how can we kind of overcome it? And I was wondering, Mike, whether you would kick us off with some thoughts around that.
Yeah, I think it feels a bit like we're all lining up on the poolside and no one wants to be the first to jump in. I think part of that is actually to do with the pace of technological change. It feels like to invest in the tech at this moment in time, you're going to go through all the kind of processes of that build out. And I think for some people, there's a sense that, in the weeks, months, years it might take to ship those features, that something like OpenAI will have come on and beat you to the punch. And so there's a bit of a problem of picking the point at which it makes sense to jump in. But I also think that as an industry, finance is quite conservative. And, on the one hand, there are good reasons for that. A lot of people are the custodians of huge amounts of money. The decisions they make can have a massive impact on people. But that conservatism has brought a adversity to risk that wasn't there in finance, 200 years ago, 300 years ago. This used to be the venture industry. And yeah, I think that what's important is to understand quite how transformational this technology could be at the highest levels. And I think as well to focus on really specific things that it can actually do right now, to sort of ditch some of the more speculative talk and actually look at what can it do today and start to see how that can improve customer outcomes.
Okay, thanks, Mike. Brian, how about yourself? Do you have any thoughts to share around that?
So I think one of the things that's holding us back a little bit about diving straight in is obviously financial services is a very heavily regulated industry, and rightly so. We're looking after people's money, we're looking after people's data, so we have to be very careful about what we do with that and also how we talk to customers. So we're in a very heavily regulated space. We have an absolutely wonderful customer support team. We do not have financial advice permission, so everything we do is what they call financial guidance, so it's not giving kind of specific recommendations to customers. So our customer support team, they want to help as much as possible, but we have to be quite vague and generic in the help that we give customers so as not to be seen to be giving kind of financial advice. We don't want to replicate that experience with AI chatbot LLM that's similarly restricted in terms of just being able to give vague and generic information to customers. We don't see that as being particularly kind of transformative. So I think, as I say, one of the things holding us back is the regulatory kind of side of things, and we will get through that. We do in this country have a very good regulator. The FCA is very forward thinking, very engaging, but it does take time to bring them up to speed with the pace of technological change. And as you know, it takes a lot of time and a lot of resource and a lot of meetings to bring them through and show them that you are doing things in the customer's best interest, keeping their data, keeping their money safe, and also that if you were offering, as I say, AI or digital kind of advice, that the quality of that was kind of up to scratch and up to standard as well. So I think it is just going to take a lot of time and resource. And as Mike says, how much advantage there is of diving in and being the first person having all of those meetings with the FCA, again, as you know, it can take a lot of time and a lot of resource, but we will get there.
Good. Sam, Jeff?
Well, I think it's just fear. I mean, fear and like staying as you are is much safer. But I would just, say that is almost the opposite. Like the speed at which the technology is moving means that is high risk. So the thing I don't understand is how the organisations don't get it. I mean, I think there's a lot of really good people in the organisations that do get it, but somehow these big, product providers are still, from my experience, finding it very difficult to, I would say, embrace fairly kind of insignificant changes. So, I'll give you an example, but, we've been able to automate a fact find, as you've seen here today, I think for probably the last 5 years. I don't know there's many places still where I can connect up my accounts and it will tell me, the fact find data, they found on me and check if it's correct. I don't know anywhere. I still have to fill out a lot of data. So that is my concern, is that the risk, balance is wrong. We're still worrying. And also just on the regulator. So my experience with the regulator, even when I was at Towers Perrin, we had to actually do, it's called some kind of section one, I can't even remember the name, but it was a bad thing. You got reported and as a 166. Yes, exactly. There you go. What was it?
So 166.
That's it. And when I was a junior, I used to have to go through these. And the one thing I would say is that the regulator wasn't out to do the product providers in. What they wanted to make sure is that they had given good advice in the customer's best interest. That honestly, in a nutshell. And so when you open up a paper file on Mrs. Miggins for the advisor that's given the advice and there's nothing in it, doesn't mean they didn't give good advice, by the way. I mean, it doesn't actually mean that. But there's no, you don't know what they've done. Literally, open the file, that's it, nothing. And so that's where I kind of learned that the regulator has the regulation to protect the customer. So if you are doing the right thing by the customer, like genuinely, and you are, and you can back it up, like it's, how risky is that? There you go. That's my kind of.
Thank you. So I think there's a number of factors in here. First off, because our world is financial advice, our immediate reference to generative AI is advice. Whereas actually for me, that's only a tiny part of it. Actually, the whole use of AI is around the business processing. It's around data analysis. It's around content creation. So I think a lot of firms are hung up. They've got stuck on the advice bit first rather than going, actually, let's just park that a second. We do that well at the moment. What would really help our customers is let's pre-populate the fact find. Yeah, sitting there going, can we do this, asking questions. So that's the communicative bit, which as humans we're meant to be really, really good at, differs from firm to firm to person. So I think there's a focus very much on advice. And because of that, there is, so I was using ChatGPT. Obviously, other AI tools are available. I was using ChatGPT last night just as a few tests. And of course, and I was just doing some stuff about various things. And obviously, there's a bit at the bottom that says the information from ChatGPT may be wrong. You should check it. And of course, that's a key driver from a regulatory perspective, from a business perspective. We don't want to go out of business because we've got something wrong. So, and I posed a question to an AI business recently, which was saying, look, if you can load all of the Conduct of Business Sourcebook and all of the Chartered Insurance Institute's financial services exams into a system, and then I load the client data in, are you telling me it would produce me a compliant report? And the answer was yes. My next question was, well, the average firm of advisors in the UK gets that logic. The bit they don't understand is when I said, if you put it in, how do you get it in there in the first place? So I think that's part of what's holding everyone back, is going, look, we get the logic, we know how to, but actually, how do we get the stuff in there? How do we get the data in there? So the fear of getting it wrong, everyone know the Petrov example. The reason we're all sitting here is because of Petrov, yes? Okay, if you're not aware of it, 40 years ago, there was a Russian Lieutenant Colonel, Stanislav Petrov, who, there's some nods now, saw that there was a missile strike being launched from America. The computers were telling him that. He was meant to phone the Kremlin to launch the reverse strike. He kept looking at it going, this can't be right, this can't be right, this can't be right. There's only 1 or 2 missiles. Surely if the Americans were going to bomb us, they'd send everything at once. So he didn't make the phone call. There was no, it was a computer error. So I think there is still this bit that everyone is concerned about error. And we need to get that bit dealt with before everyone will jump in the swimming pool.
Can I just add to that? Can I just say one thing? So I looked something up just before because I thought it was interesting. in the UK, there's just under 30,000 fatalities and serious injuries to people on the roads. And the conundrum we're going to have with that is when you bring in automated driving, you might only have 10,000 a year, not 30. So, how do you square that circle? So going back to your mistakes, so we are all going to still make mistakes. Like the world is going to keep making mistakes, but the balance, of that could be massively improved. So that's the bit I struggle with a bit, is that kind of pick these things, but companies could be so much better off. But then it's also the conundrum of how you explain that, because obviously, I think we have one accident, don't we? With it, of course, it's in the media, it's massive, if you like, and the world is, oh my God, there's been someone killed in an automated car. So anyway, there you go.
I guess part of that is down to just proportional relative regulation and controls, right?
It's difficult, right? It's difficult.
It is difficult, yeah. Craig, how about yourself? Do you share any views on that?
Yeah. So to echo the sentiments, really, we operate in a highly regulated industry. So we're never going to be at the far right of the adoption curve. I think we have to accept that. It's the regulation, it's the FCA, it's the brand of the FCA and the strength of the UK legal system that makes fintech such a prosperous and traditional finance such a prosperous vertical in the UK. Conversely, when it comes to new tech adoption, that is going to limit the speed in which we execute. So I work in fintech within Google. Our friends in MarTech, for example, will see the introduction of Gen AI sooner than my team. So I think we're in a good place. I like the caution. I think it's needed. And I expect, as an example, talking of regulation, we can now build regulation into the development cycle. So meeting regulatory requirements in development using Gen AI is an example of how we go from being risk adverse or remain risk adverse, but through embracing Gen AI, not walking away from Gen AI.
Yeah, can I just add to that? Because I think it's a really good point. And I think one of the ways you can solve it is by having more cross-functional teams working on this stuff. So what we found really useful when we were developing our advice prospect was we had somebody in the room with a compliance background, with an advice background. We had someone in the room with a product background, and we had someone in the room with a technical background. And between them, they could solve the regulatory issues on the fly. Now, every now and then, something might need to go off for a kind of sign-off, but you need people in the room who are kind of empowered to say, I'm not comfortable with that, I am comfortable with that, and to problem solve all the little issues. And I think sometimes these departments sit in separate rooms, separate buildings, separate countries, in some cases where we've worked with people, and you're never going to do that if that's the case. So yeah, I think organizational design is part of how you can perhaps break some of the calcification.
Thanks, Mike. So actually, we're gonna move things on to those kind of more specifics now. So I'm gonna move on to asking what the different ways people are actually seeing Gen AI being implemented, both in the near term and the long term. I'm going to move to you first on that, Craig.
Yeah, I guess through the lens of the consumer near term, and we're here now. It's the orchestration of existing services through voice. So leveraging our existing applications through voice, activating through voice. Nobody I certainly don't like lots of disparate apps. So bringing that intelligence together through voice, I think, is an important win from a UI and a CX perspective for the customer. From slightly longer term, I would say from the consumer perspective, and Multiply AI are the perfect example of this. It's the hyper-personalization of the customer journey. So full lifecycle advice, management available to absolutely everyone. As we all know, financial advice, financial consultancy used to be available to those that had money. It was as simple as that. A human would advise those with money how to make more money. Multiply AI and alike are now bringing that financial intelligence to market for everyone.
That's great. How about you, Brian? Do you have any thoughts to share on specifics? You mentioned that you're starting to explore some stuff.
Yeah, I think the stuff that we're exploring at the moment is quite internally focused. So obviously there's a lot of applications that can help our engineers, and we are also looking at AI applications that will help our customer support team resolve issues quicker, categorize problems, all that sort of stuff. I think the bits that we're really interested and excited by in terms of the customer-facing stuff, that is fraught with regulatory challenges. And I think there's kind of two specific ones that we will need to help the regulator kind of get over. One is that the FCA absolutely love a process. So the example that you give in terms of like the paper file, they love to be able to see documentation that said, customer says this, therefore the advisor went away and did this, and therefore recommended that. They love to be able to see that. When you start to get into large language models and AI models, like that becomes a lot more difficult, if not completely impossible to document in terms of the input and then the output. So that's something that we're going to have to kind of get them on board with. The other is the scale problem as the FCA kind of sees it, because we all look at this technology as solving problems at scale and solving the advice gap. I think we were talking about this kind of 3 or 4 months ago, that without the regulatory side of things, the technology could solve the advice gap probably within the next kind of 6 to 12 months. So we all get very excited by that. But the FCA looks at that differently and basically says, we know how to regulate a human advisor. If there's somebody giving bad advice, there's only so many hours in a day that they can do that from a human perspective before they'll be picked up via compliance or first, second, third line of defense. But when it comes to, again, AI technology scale, you can give bad advice to thousands of people a day if something kind of goes wrong. So we need to bring them kind of on board with that. And then more kind of in general terms, we've come from a world where the FCA is trying to eradicate any bad outcome for any customer ever. Basically, that is kind of where they have been. And that has led to financial advice being very expensive, very difficult to deliver at scale, because there is all sorts of kind of compliance issues, and it becomes kind of quite expensive. Where we need to move them to, and you see movement kind of in this direction, there's a policy paper due on financial guidance in the next kind of couple of weeks, is basically saying we need to get to a space where the technology is delivering very good outcomes for most of the people most of the time, not eradicating every single possibility of a bad outcome, making sure that there are catches and compliance and all in there, but most of the people most of the time are getting very good outcomes, and that will help us kind of close the advice gap. So I think that's where we'll get to in the medium term, but that's the work that we need to do between now and then.
Yeah, sorry, I just wanted to make a point on that. I do think it's worth saying that I think some of these tools can actually make regulation easier in places. And that's a kind of point that I think sometimes gets lost. So a good example is, there have been lots of mis-selling scandals where proving that the customer knew what they were buying, proving that they understood the recommendations being given to them was hard years after the fact. You maybe could show the FCA documentation, you could show the Ombudsman documentation, but it was hard to prove it. If you have a chat history of a full conversation where you've seen the user ask questions, you can present the responses you laid out to them, you've got a document you can take to the FCA and look, this person knew exactly what they were buying. We went out of our way to actually walk them through it. And I think this has the potential, to be better from a regulatory point of view, better from a consumer point of view. And it kind of, I think ultimately it's a better solution than the kind of current approach, which includes, these risk warning kind of blocks of text, which I don't read. I don't know if everyone here, it's stuff that you just glaze over. And I think there's a real risk that stuff just doesn't pass muster with the regulator, in future. And I think there is a positive side to the kinds of tools and developments that we're talking about.
Well, I just say that I think the rules of the game are slightly changing anyway, because we now have to have ongoing suitability. So you can't just sell someone something anyway and then forget about it for 30 years. As the product provider, you have to make sure under consumer duty that you are actually, checking the suitability of the product you've sold the customer against other products you have available, for the life of that customer with you, which I think is a big change anyway. And I think you put all of that into the pot, we have to get better at, assessing suitability like 24/7, like ongoing. So I think that actually is going to drive some big changes. So the uptake of technology, I think, will happen because you can't really do it without it. But just to give you two really positive examples, because we all get a bit upset about our industry, which is very easy to do. But so one of our very progressive large enterprises, which is very exciting, is actually working with us to tell the mass market that they have, so not the 1% club, but the non-1% club, what's the next best action they can take with their money. And that could be different each month, because what you get told one month and what you get told the next month could actually change. And I think that's such a fantastic, correct step, in the journey with your money. And I've not seen an enterprise embrace that kind of openness, because it genuinely might be, nothing, not heading them down anything they've got to offer in terms of what that next best action is. So that's really exciting. And then the other one is just to kind of say that it does take time in our industry to come off systems onto others. So the way credit decisioning has been working for, I don't know, probably 40 years, but if you go back so long. And, it's a very traditional credit agency model. The decisioning algorithms and engines that sit underneath that are very clever. But of course, once you've got all that set up as a company, you can't just put that in the bin, can you? Do you know what I mean? You can't just put it in the bin and go, oh, we're going to do it kind of real time over here now with open banking data. But what is lovely is that one of our clients is actually anyone that doesn't get the loan or the mortgage. So they get, they fail with their traditional process. They put them straight through an open banking decisioning process. And 20 to 30% of those rejected customers will get a loan or a mortgage, because some of them just have a thin credit file. They don't have a credit card. They've not 10 years and they don't really have much to show for it. But actually, when you look at how they manage their money, whether they pay their bills, they are not missing a trick. They've got a good salary. So there's no reason not to lend to them, but they just don't meet the kind of what traditional criteria enough at a high enough level or a bar to get them the loan. So I thought, that is brilliant. So we are seeing some really good things being done, and that will continue.
Okay. Wow. Wow. So I think there's two parts. So first of all is the processing. So a lot of the tasks that are written into systems and processes. So let's take a really simple one. Okay, we look after your money, and you want some of that money to spend. Okay, nice and easy. How do you get it? Okay, so at the moment there is a process that you have to contact your advisor. Your advisor has to decide from an advice perspective about whether you should take your money out of your pension, out of your ISA, out of whatever, and give that advice to you. Okay, you've then got to get the money in your bank account. So all of these are currently functions that sit within humans and technology merged together. What we are now seeing is, and so we're working with Intelliflo, the sort of the leading industry back office system, along with one custodian that is actually going to take that throughput processing. So it will be AI based. So you won't need all of those human steps. You've got to build the framework and the structure within it. But when you want your money, actually, there should be a process that actually makes that as quickly as possible and ends up in your bank account. Not has to have three people, one check it, all the rest of it. So those, I think, those are systems that are happening. Those are systems that are live. Those are going to be available very, very soon. From the advice perspective, we do keep coming back to the regulation aspect, because the things that we need to work with the regulator are, we talked about some fantastic examples here of actually what you should be doing is telling someone what they should be doing next. And if you take Experian, there's a good example. So Experian, largest data gatherer in the world, FTSE 100 company, they've got something called financial strategy segments, which take your postcode, takes all the available data and says, that's the strategy code you are today. Your path in life will actually put you in that box next to that one and that one. I'd quite like to know how to get to that one, please. Because that one looks slightly better. Or actually, I don't want to go on the traditional career path of that. I want to go and do something slightly different. So that sort of information becomes key. From an advisory perspective, however, what we then walk into is financial promotions and advice rules. So one of the conversations I've been having with my compliance team at the moment is saying, look, I've got access to AI that will be able to, based upon the data we've got, and no doubt we'll talk about data later on, but based upon the data that I've got, there are actions that people should be taking. So let's just take 10,000 customers as an example, okay? So what I can do from a technology perspective is push an email to each of those 10,000 people telling them what they should do. That's a call to action. My compliance team is struggling with how do we sign off 10,000 individual calls to action to make sure that when the regulator comes along at a later date and says, why did the customer do that? What's their starting point of the journey? We could prove that each of those calls to action, those financial promotions were signed off. So there is a challenge there. But interestingly, that challenge is best solved by AI. Because actually, if you build the framework, and we'll come on to the ethics of building frameworks and algorithms, because if an advisor is providing advice, are they doing it in your interest or their interest? That's always the challenge. That's why the mis-selling scandals have been there. If the algorithm is written perfectly, because that's all ChatGPT is, that's all any generative AI is a set of algorithms. So it's saying, based upon this factor, this is the outcome. If that outcome is there, then that has some massive improvements, and that's something we're really interested in. So I think there's two aspects that are going to drive it, but I think the first thing that advisory firms are going to get to grips with is the content creation. Not necessarily the personalized content creation, although I think that's a logical step. I'd like to go onto a website, use it twice, and it knows what my journey is. Why should I go to the home button each time and try and find where my valuation is? If it knows I go on and look at my valuation at 3:00 on a Friday, just give it to me straight away. That tech is there, so that'll be used. But content creation, it takes me hours to write an article, and it takes ChatGPT 10 seconds. And I think so. I think a lot of that is going to be used early on. I think the advice bit needs to be cracked, but we need full engagement with the regulator to get there.
Thanks, Mark. I mean, on the risk and compliance side, that's an area we've been spending a lot of time on, the controls and all that kind of stuff.
Yeah, I think one thing worth saying is that the best way to solve some of the problems with the AI not doing what you want it to do is to have a human in the process checking it. So I showed you examples of document upload. Well, the nice thing about that as a use case is you immediately present the information straight back to the user, and they can say, yeah, that looks good, good. No, that's not great. When you go to Google, there's a reason why most people don't use the I'm feeling lucky, and that's because actually a little bit of human filtering is a good thing, but it gets you the top 10 results that, one of which is going to be the right one for your needs. And I think there's a lot of use cases for this technology where if you have a human naturally part of the process, it still speeds things up, but they're sanity checking what's going on. And I guess the other thing I want to say is that, when this conversation, you hear this conversation sometimes, and you just want to sort of give people a shake and say, this is finance. We deal with uncertain systems. We deal with risk. We deal with, systems that can't be easily predicted. This is the bread and butter of all of the firms in this industry. This is stuff that, there have been ways developed of controlling it, of managing it, of understanding how exposed you are. And I think the same is true of these AI tools. I think if you can get people convinced on the value that they will actually be able to generate in the business, be that, massively speeding up processing claims forms or much better user engagement and therefore, higher volumes, whatever it might be, then I think the heads will engage, the actuaries will come out and will work out how to bound the risk and deal with it. Yeah.
Cheers, Mike. So let's move on to, instead of the kind of different use cases and stuff, let's move on to another really important aspect of finance, which is around trust and the fact that people can be very sensitive about sharing their data. So with this kind of rise and this trend that we're seeing around the rise of AI and I guess data sharing to a degree in finance, how do you think institutions can ensure transparency and maintain that trust that they have with their clients? And Sam, I was going to start with you on this one.
Well, it's an odd one because it's a bit of a mixed bag. So you've got a certain segment of society that is very cautious, doesn't want to share anything with anyone. In fact, there's still people who won't put their credit card, online. Do you know what I mean? Because the fear of what's going to happen is too much for them. So you definitely have that segment, but you've also got another segment, which is sharing everything with everyone, including ChatGPT. Because I think someone told me the other day, I don't know if anyone can, verify this. You might be able to, Mike, but apparently ChatGPT in the last year has got more information about, individuals in terms of their health, their money, than actually all of the financial services industry have had for years. So people are willing. I think my point I'm trying to make is trust can come from the organization, So I think we looked at like chatbots. I mean, what, are you going to interact with a chatbot? Well, if it's from an organization you trust, I suspect you will. If it's a random chatbot that appears on your phone, probably not. So, I think you've got to understand about where people's trust lies. But on top of that, don't underestimate the value exchange. The minute you offer people something they value, honestly, it's just like the door's open. It's unbelievable what people will do, in terms of the values. And it becomes the minority that doesn't. The majority will do it. The thing is, I just don't think we're that good as an industry at coming up with good value exchange. But, I'd prefer to pay for Google Maps, personally. Sorry, Google. But I'd prefer to pay a subscription and not share my data with you. But I don't get that choice. But it's pretty good. It's probably saved my marriage in terms of navigation. We end up not fighting when we get places. It's worth it, right? So I'll share my data. But, Google knows, you think about what Google knows about me in terms of the amount of times I've used maps over the years. So I think you've got to just put things in a bit of perspective. If you can get the value exchange right, you'll get the data without a blink of an eye. I mean, a parking app. Downloaded a parking app at Didcot Station, and it said it wants access to my photos, my contacts, literally rattled it off. And I'm like, no, you don't need access to my photo. Ridiculous. And then it says, so you can't have the app. I'm like running for the train. I'm like, download it again. Yes. Have the lot. I need to park the car. I need to pay for it. I can't get back to the car. I don't want the fine. You try, but, it's really hard.
That's why you need to carry some spare change around.
I don't do.
Find a machine that takes money.
Exactly.
Yeah, it's not going to happen. I think so. The point about value and data exchange is the absolute key to this. So let me give you, and we're not good at it in the UK in the same way as we're not good at having those family conversations about what's in someone's will and what happens when mum and dad die. There's things we're fundamentally not good at here. And that value of data exchange, let me give you a quick example. A few years ago, I was leading a project for a very well-known pharmacy, chemist, high street organisation beginning with B, so you can work out who it is. And we were running a liability project on their pension scheme. So final salary pension schemes, billions of pounds of assets, billions of pounds of liabilities. And we're running a project, and I got called in to the board to explain why so few of their members we were advising to transfer out of the final salary pension scheme. And I was saying, well, it's high level, it's not appropriate, it's not suitable for them. And they were saying, well, we don't think that's right because the majority of our staff are female, they're working for PIN money, it's a small amount of the income for the family. And I went, well, sorry guys, but you're wrong. So here's all the data. Here's 3,000 of your scheme members who we've interviewed, 3,000 times fact finds of how many hundreds of cells of data. And actually, this is what your average member looks like. And this is why they work for you, and. And I was met with stony silence. And the managing director turned to the human resources director and said, why don't you know this? And he said, well, all I know is the date they started work with us, their current address, hopefully, and their bank account details so I can pay their money to them. So he turned to the actuary, the pension actuary, and said, why don't you know this? And the pensions actuary said, well, I know their date of birth, I know their gender, I know the date they started work for you, I know their current salary to calculate their pension benefit, but that's it. And I said, well, don't you know if they're married? And went, well, no, we just assume that every male is married to a female who's 4 years younger and every female is married to a male 4 years older. Trust me, that is how this multi-billion pound industry of final salary works. Now, if you agree to a data exchange of more valuable data and information, the end result of that could be that those pension scheme members might have to pay less into their pension. Because every single pension scheme member who's not married doesn't have a spouse's benefit that's waiting to be paid. But the pension scheme assumes that everyone in there is married. Therefore, every female is married to a male. The male's going to die first. The female's going to live to 83, blah, blah, blah. So that data exchange piece, I think, is absolutely fundamentally key, that we've actually got to show why that data exchange is valuable. And that's our job as communicators to be able to share that. I think if we get over that barrier, then I think that the whole world and the way that people will view it will be completely different.
I'll just add very quickly, there was a story last week that was kind of potentially drowned out a little bit by all the autumn statement fun, but it was the data exchange and the contract between NHS and Palantir, which you might have seen. It is interesting, and there was some poor soul getting destroyed by Nick Robinson on the Today program in the morning, basically. And the crux of the matter was effectively there was no opt out for people with their health data, and that is obviously a problem. So I think it's all about, from our perspective, it's about giving the customers choice, building that trust, kind of allowing them to opt in or opt out if they want to in terms of the data exchange, and then just being very, very clear on the value exchange of kind of what they're getting if they do choose to share their data with a enterprise or an institution that they trust.
That's right. Craig, I was wondering whether you had thoughts of, maybe from the world of Google around building that level of trust and around the data exchange side of things, or how perhaps perspectives are changing in the world of AI and those sorts of tools.
Yeah, I think it's been touched on, but I think communication to the customer is absolutely the key. The prototypes I've heard internally of chatbots now, maybe it's because I'm partly deaf, I don't know, but for me, the untrained ear, it's hard to distinguish now between chatbot and human. I think most humans fully appreciate the value that chatbots can bring in terms of hyper-personalized customer journeys. But I think, again, it's key from the outset to communicate what's human, what's chatbot. If a customer feels like they're being hoodwinked, it's difficult to re-earn that trust. But clear communication around where Gen AI and chatbots are used and where it isn't. And I think the customer buys into the journey and accepts the value that Gen AI can bring to that journey.
Yeah, Vivek, you said this, I think, to me very early on when we started Multiply, and it was that the key to trust is to tell people what you're going to do and then to do it. And I actually think that's a really, really good mantra to have. I think that suggests with things like this that you don't overpromise, that you're clear with customers about exactly what's happening to their data. And I also think it touches on something that Sam mentioned, which is around, when customers, I'm sorry to bang on about things like risk warnings, but it's a topic that's sort of fresh in my mind. Some of these are written from the perspective of the company. They're sort of presented as a warning to the user, but the actual content for the user is not there. It's for the company. It's and I think that's a great way to lose trust. Your companies acting in their own in their own interests, kind of on behalf of the user, talking about it as though it's a kind of user benefit. I think that's a really great way to kind of kill it. So yeah, communication and being upfront is definitely key.
Great. So we've got some time now for some Q&A from the audience. So I don't know whether there's anyone here who's got some questions. Yeah, and I'll start bringing the mic around. You go, Murray.
Right. So in the presentation, you're talking about personalization. We already have entities that do lots of personalization, but whose interest is it in? So it's your AI, not my AI. And so I'm interested to know where this power dynamic is going to be. So signing terms and conditions, why doesn't my AI tell you my terms and conditions and then they work it out? So we seem to have islands of corporate capabilities, and we as consumers, human beings, are kind of on the outside at the moment. How do we ensure that the power base moves to the individual and isn't just created in all these big corporates?
So who wants to take that?
I can start us off. Yeah, I think it's a good question. And I think one thing I think that's not clear is whether, we talked a little bit about a unified interface. So is the way that this technology is really going to be in people's hands that people are going to something like ChatGPT or Bard or similar, and I feel really guilty about this actually, because the demos that you saw earlier, almost all of them were generated off Google technology. I want to make that clear. I'm not just saying that. But yeah, so is that going to be the interface in which you access all of these other services? Now, OpenAI would really like that to be the case. And I think if that is the case, actually, there's quite a lot of power in the consumer's hands, because they have an interest in you being able to customize that interface. The way that the technology works means that you can kind of interact with it at that point. But obviously, the other example is actually one where this technology is embedded in lots of different, consumer use cases, and that, you actually don't go to that centralized point of call. You might do, but you're more just as likely to use it on other people's tech. Now, I think even there, actually, until we solve some of the kind of alignment problems around how it works, I think there still transfers a lot of power to the consumer because you can ultimately direct it to where you want. And I think the third thing I think that's kind of important, I guess, to perhaps understanding how this is going to play out is the technology is surprisingly democratized already. You know, Facebook, probably one of the people to talk about for this, but you know, they've put their large language models out into the wild. You can download them. You can, you know, you probably need a bit of decent hardware at the moment, but you can run these things on your computer. You know, so that's quite different from a lot of other transformational technology. You know, obviously the training phase is out of scope for people, but the actual usage phase is something that where everyday people can understand. And by its nature, it doesn't need a load of programming knowledge to kind of understand. And you see this kind of explosion happening where people for whom stuff was cut off from before, it's now open to them. So, you know, big corporate's going to big corporate. I think people will try and shut things down, and you know, I understand the dynamics that at play that lead to that. But I am hopeful that I think it will change the balance of power.
Someone else from the panel wants to chip in?
I'd just say, what I was thinking is that power dynamic has kind of always existed, really. As I say, AI and large language models might accelerate it, but it's always been the case where there's thousands of people working for corporations and you as an individual are, as I say, just kind of one person trying to navigate that world. The only thing that we as consumers kind of have is our consumer choice of who we use and who we exchange our data with. But as Sam's example, when you're just trying to park somewhere and you have to exchange all your data for that, it is becoming kind of progressively more difficult to opt out from these kind of data exchanges with the big kind of corporations. The one thing that gives me a bit of hope from a kind of financial services perspective, well, two things. One, from an insider's perspective, working in companies, everything that I've seen kind of throughout my career is that the corporations, the companies I work for, genuinely have customer interests at heart and try and make people make better financial decisions with the data that we use. And then again, back on the regulator perspective, there is now consumer duty, which came in over the summer. And I think we've all seen that absolutely has teeth, and the regulator will come down like a ton of bricks on corporations that do not have customers' best interests at heart and trying to encourage good customer outcomes as well. So, yeah, as I say, there's a little bit of kind of hope there, I think.
Well, I think you're a man after my own heart, but I just think we're not common. So I even looked into when I was looking at the data we collected, you know, with individuals on our MoneyHub D2C account, our direct consumer app. I looked at whether or not I could offer them their data to a third-party provider, which we could offer to sell it for on their behalf, because a lot of the hedge funds wanted the data, but they were offering £2.50 a year for the person's data, and I thought, what would I do? Would I let them have all of my personal financial data for £2.50 a year? No. So I thought, do you know what? It's not worth offering that, is it? It's not enough. Do you know what I mean? So this is the slight problem you've got, is that I think we are quite unique, and unfortunately there's too many people in the world, which I don't think will change, that are going to be very happy to just, you know, plow on. You know, they like free. You can say if it's free, you know, you're the product, but they don't really care. So I think that's why I think the regulation that's working, which is putting the onus on in effect the companies, the enterprises, the product providers, if you like, I think that's where the regulators are going to try and put it on them to say, you need to take more responsibility, because unfortunately individuals in the main probably don't. Maybe they should, but probably don't.
Thanks, Sam. Simon, you had a question.
Yeah, good morning. We've talked about data exchange, value exchange, and maybe the move to digital currency. And I think Sam's example of the car park is a good one, because we've probably all experienced that, where you can't use money anymore. So I suppose the question then becomes, do we move to an environment perhaps that we see in China, where there's social profiling based on the data that we either want to share or inadvertently share? And the next bit then is that, do we then have a set of people who are excluded because of the data that they've shared, because of their beliefs, their political views, their religion, socio-demographic factors or whatever? which then leads to an underclass. So that's quite a heavy question, but so apologies everybody, but an important one.
I think this is something to really take seriously, actually. I think, I think when social networks were kind of coming of age and, it felt like, I think if you wanted the sort of technologist perspective at the time, maybe a more, naive one, certainly. But I think the view was that this wasn't like technology back in, the 20th century. This wasn't uranium. It wasn't things that were, had an obvious tangible impact on people's health. And so there was a sense that, okay, there's issues with data. Ultimately, what harm can it do? And I think, obviously, we've seen what harm it can do. I think there were a lot of small social interactions, subtle contracts between the way that our society works that were just kind of broken. And I think in some ways the good news is that we're going into this AI phase with some of that in our minds. I worry about subtle bias. You talked about a kind of underclass. Well, I worry that, when you talk to something like ChatGPT, the way that you ask questions and the way that I ask questions will be giving it hints about who we are, and if you have a longer conversation with it, you'll be giving more and more hints about your kind of, your social status, your background, perhaps even, things about your ethnicity or things like that. And the challenge with the way that the AI is trained is it's trained on the human internet. So it reflects the stereotypes, it reflects the things in the public consciousness that we as humans put there. So a combination of those two things, I do think, has the potential to lead to a really subtle, or possibly not subtle in cases, but a really challenging problem of bias. And I think one of the best ways to do that is to be upfront with it early on, that people who are adopting this technology, understand that in a way that when kind of social networks were being built, I don't think people did understand it, and I think people were very blasé about it. And I think it's also, the this is probably odd from fintech, but I think it is people like the regulator, the EU, the government holding companies to account for learning the lessons that happened with that kind of previous wave, and what I think are really quite tangible,